Let's analyze AMD stock today. I will show you what the market forecasts for these shares. We will also touch upon the support levels and look at the significant resistance that AMD stock recently overcame and where it might go next. Let's start from the beginning. After a substantial growth at the beginning of the year, AMD stock rose by 50%, but then it dropped by 30%. For the past several months, it has been in consolidation for almost 50 days. Today, however, it experienced a 5.5% increase. Now let's look at the options market and see what it can tell us. First, let's touch on volatility. As we can see, volatility remains quite stable, which is partly due to the stock being in consolidation for a long time. The longer the stock stays in consolidation, the lower the volatility, or it stays at already low levels. Recently, volatility has started to rise slightly. This is partly due to the significant increase in the stock price. I would like to remind you that volatility increases not only when the stock falls, but also when the stock rises significantly. Consequently, as the stock has risen, the volatility is also starting to rise. Now let's look at the volatility smile. What is happening here? We can see that at the nearer strike prices, volatility is increasing both towards the upside and the downside of the stock, meaning both call and put options. This is a normal situation because investors and traders are pricing in the possibility that the stock could either rise or fall in the near future. However, if we look at the longer expiration dates, we can see that volatility remains flat on the upside, while on the downside, towards the put options, volatility starts to increase significantly. This is due to investors and traders hedging their purchased stocks by buying put options. That's normal, but it's something to keep an eye on in the future as well. Let's look at the historical and implied volatility. As we can see, these two volatilities are at the same level. I remind you that the gray line is the historical volatility and the white line is the implied volatility. This is a very good example. I always tell you that implied volatility always returns to its historical values, and this is a perfect example of how that works. Why is this information important? I remind you that you can trade not only the stock itself, but also the volatility. In fact, trading volatility is even easier because we have a reference point, which is historical volatility. Currently, as we can see, the implied volatility has returned to its historical values. Volatility can only be played through options. Let me show you one of the strategies that artificial intelligence can offer. For example, let's say we predict that volatility will increase by the end of summer. The AI might suggest a few strategies. Let's take one of these strategies. It suggests selling one call option with a strike price of $155, buying one call option with a strike price of $170, buying a call option with a strike price of $175, and selling a call option with a strike price of $175, and selling a call option with a strike price of $190. This strategy is quite interesting, but also quite complex, meaning it is difficult to profit from this strategy. In fact, it requires management, as with all strategies. I just showed a hypothetical strategy that allows you to play on the increase in volatility. I do not recommend you open it because it is complex. Moreover, I would not advise you to trade based on artificial intelligence or bloggers instead. Think for yourself. Now let's look at the resistance and support levels for this stock. As we can see, there is a very strong resistance level at $170. Also, the next levels are $172.50 and $175. What's happening here? Actually, trading is still ongoing, and at the moment, we have already surpassed this significant level. However, it's difficult to say whether we've fully overcome it or not until the market closes because there's a possibility that we might drop back below this level due to the massive resistance here. The next resistance is at $172.50, and we have clearly paused at this level. You can see how precise the options market is. It's a treasure trove of information, showing exactly where the price might go. I always trade based on the options and derivatives markets, and it usually works out well for me because these markets clearly define key levels. If we overcome this level, the next resistance will be around $175. What happens if we surpass this? There is potential for the stock to accelerate upwards. If these levels are breached, the stock could rise sharply by about 30% at some point, possibly around February 2024, and we will definitely be watching this closely. Why should we monitor these levels? Let me remind you how the options and derivatives markets work. When investors buy call options, market makers on the other side are obligated to sell those call options. When market makers sell you call options, they take on unlimited risk. Therefore, they need to hedge this risk, usually by using a strategy called delta hedging. This means they buy as many shares as needed to match the delta of the options sold. The higher the delta, the more shares they need to buy, creating a feedback loop. As a result, we have significant resistance at the levels I mentioned. Again, market makers are not keen on letting the stock rise above these levels because they can also collect premiums which is beneficial for them. So based on derivatives, I would suggest that the market might close around $170. This implies that the stock might drop slightly by about 1%. Yes, $170 is a hypothetical assumption. I don't know for sure. I'm just operating with facts and options. If the market closes below these levels, congratulations, everything worked out perfectly. Now, let's look at the support levels and put options. There is resistance here as well, working similarly to call options. Therefore, hypothetically, we could close right around $170. We'll see how it plays out, and you can evaluate the accuracy of the forecast. Achieving such precision is difficult, but I try my best. Now, let's look at the open interest in options. As we can see, there is significant open interest at many strike prices, including $200, $180, and $170. We need to be very careful here, analyzing more deeply who is opening these positions and why there is such interest, whether it's institutional investors or individual investors. This requires a cautious approach. Next, let's look at the market forecast. Again, I remind you that all the current market information, including options, news, financials, and derivatives, is priced in. At the end of the month, we will have an earnings report, and while the market doesn't yet have that information, it will reassess once the report is out. Let's see what the market is currently forecasting. It indicates a potential drop in AMD stock to $160, $165. The market essentially suggests that the stock will decline. Now, let's look at the market forecast for the end of 2024. It predicts the stock will be priced between $145 and $155, indicating a more significant drop. This is quite a serious decline, but the market predicts a downturn for many stocks, suggesting a possible upcoming recession. They believe in the onset of a recession, but again, I am just telling you what the market forecasts. Let's return to the stock. I remind you that my philosophy is that I cannot predict price movements. I don't know where the stock will go. My main task is competent position and portfolio management. Let me show you one of the strategies. The payoff diagram looks like this. If the stock rises to $200, we will earn $2,500. We can increase the position, for example, to 5 open positions, which would increase the potential profit. So if, for example, the stock rises to $200, we can earn $13,000 from 5 positions. If it falls to $150, we can also make $10,000. If the stock moves sharply up or down, we might incur some losses. This reflects my philosophy: no matter where the stock goes, we earn. That's the secret. Again, my main task is competent portfolio and position management. I always emphasize this point. Now let's look at 3D volatility. I remind you that all volatility information is considered here, including expiration dates. Investors and professionals often pay attention to this to devise interesting strategies based on options. What could happen to this stock? It's clear that the future lies with semiconductors, but if a recession hits and the market falls, I predict that AMD stock might correct significantly, just like Nvidia. However, this presents a good buying opportunity. For instance, if you had bought this stock in 2022, you could have earned 300%, nearly tripling your capital. This could happen again. If the stock falls to $100, I believe it could even drop further. But after bottoming out at $100, when a new growth phase starts, it could rise to $300 or even $350. I firmly believe this, though it will take more time. If someone wants to make a quick profit, I can't help with that. It requires a longer time frame for such earnings. However, this stock can deliver excellent results in the long term. It's essential to manage this wisely, hedging the position at times and knowing when to sell or buy. I remind you that I have launched a new portfolio from scratch, where I detail the stocks I buy and show in detail how I manage positions and the portfolio. A new episode will be out soon, where I'll discuss the positions I've started to open. Leave your comments, and good luck to everyone.